Hello, ladies and gentlemen. We are going to calculate the price to earnings growth ratio as a way of building on the 2 PE ratio videos we already did. So if you haven't watched those, please go back and watch so you can learn just how we're going to do all of the mechanics of the PEG ratio, which I'll explain in a moment, as a way of helping you, ladies and gentlemen, learn how to make money in stocks. Okay. Now, the reason I have a watch and money here is because the price to earnings growth accounts for time, because it actually accounts for the growth in earnings over time. So let's get rid of the money and the watch. Go back to that later. And let's define what it exactly is that we're doing. So what we're doing here is we're going to calculate the PEG ratio for stocks. So that's the PEG ratio, PEG ratio. That's what we're going to learn today. And what this is, this equals the price to earnings growth. And the way it's calculated is you take the price per share and you divide by the earnings per share. That gives you the PE ratio. Okay, if you'll see from a previous video, then all that is divided by the earnings growth, which we'll learn how to calculate here in a moment. Okay, so if you're looking at this, this is actually just the PE ratio. This whole thing equals the PE ratio that we already calculated. And that is divided by the change in the earnings per share over year to year. So the way that's going to work is this denominator here is going to be the new earnings, we'll call the new EPS, minus the old EPS, over the old EPS, okay, and all that times 100 to give us a whole number. Let me extend out this denominator line so you can see. So PE ratio divided by that for each company. All right, so ladies and gentlemen, let's get to it. Now, we're going to create a table here, and that table is going to have several variables written on it. The first thing we're going to do is have the name of the company here. Name of the company right there. And here's going to be the ticker symbol or the stock symbol. We're going to need that. The next thing we're going to need is the current price per share. Okay, price per share. Then we're going to need the new EPS, the old or previous year's EPS. Okay, and then we're going to compute this as a percentage, the change in the EPS. So we're going to have change in EPS as a column, and then we're going to have the PE ratio here, and finally the PEG ratio is going to jump out over here. So let's figure out a few companies that we're going to check. The first company we're going to check is Ford. All right, Ford stock symbol. Let me make a row here. I'll just go ahead and list all the companies we're going to do. We're going to check Ford. We're going to check Facebook. We're going to check Nike. And then finally, we're going to look at Apple. Okay, those are the companies we're going to check. We're going to do 4. And let me just extend this out. To make our table, you could use Microsoft Excel to do this. I'm doing it by hand, so you can follow along. Let me extend out these and make a nice looking table here. Okay, something like that. Let's draw in our columns. And then we're just basically going to fill in all this information. I'm going to move relatively quickly because the other two videos explain how to get to the PE ratio, and I'm going to assume that you've watched those videos before you watch this one. So look in the playlist or check my library for the previous videos on those, the PE ratio calculations, so you can get caught up to speed. If you already know how to do that, then we'll just take it the one step further here. That way we don't waste too much time repeating ourselves. Okay, ladies and gentlemen, the symbol for Ford on the New York Stock Exchange is just F. Facebook is FB. Nike is NKE. And Apple's the only one that's not an NYSE traded stock, so it's under NASDAQ as AAPL. Okay, so now I have the information, but I'm going to show you how I got the information. We're going to do it very quickly. So what I'm going to do is share my screen with you, and we're going to jump to a browser, go to the SEC's website. Where we're going to go to Google Finance and look up these prices, come back, put them in, then go back, go to the SEC's website, get all the information we need, then come back and compute everything. So let me share this with you. Now let's jump to Google, and we're going to type in NYSE and Ford for Ford. That gives us a price per share of 1081. And while we're showing you this, rather than flash back and forth to my screen, I'm just going to fill in the price per share column. And then we're going to go to Facebook, which is just FB. That's 184.76. And then we're going to do Nike, which is NKE. And that price is 66.82. And then we're going to look up the NASDAQ price for Apple. And that gives us 181.72. 181, ladies and gentlemen, 72. All right, let me quickly flash back to the screen so you can see what it is that I'm doing. All I've done is, as I was talking, I put those prices into the price per share column. I didn't change anything else. Now we're going to go back to the screen and we're going to look up all the SEC data for the EPS for the last 2 years. So let me show my display one more time. And we'll flash back to Google. And what we're going to do is up in the search bar, we're going to type in SEC Edgar to get to the Edgar database. And we're going to do it, I'll show you a little bit different way. Click on the company search page here. And under the ticker symbol, our first stock is Ford. We're just going to put F. Here's the company filings, narrow by 10K. That's the annual report, search. When this comes back, click on documents for the most recent year 10K. Then click on the 10K doc itself, load it up, scroll down until you see the hyperlinked table of contents. And what we're looking for here is the selected financial data right there. Item number 24, scroll down, there it is. Now keep an eye out. They put their most recent year on the left, or pardon me, I just said it wrong. Their oldest year on the left and the most recent year over here on the right. So what we're looking for is the basic income earnings per share data right here. So the values we're looking for are the basic income earnings per share. Most recent year was 2017, $1.91. So while I'm going to fill this in as I go, $1.91. The previous year was $1.16. Okay, let's fly through it. Go back to we'll go back to the search page and change the report that we're looking for to Facebook. So you can just add a B right there. Oops. Add a B right there for Facebook. Change the filing type to 10K to restrict. Search. Thing that comes up, most recent 10K, click Documents. Then click on the 10K itself. Scroll down. Selected financial data right there. Okay, so we're looking at basic earnings per share, the most recent years on the left. Basic earnings per share for 2017 for Facebook is $5.49. And the next most recent year, 2016, $3.56. Okay, now we're going to go back to this for Nike. We're going to go back and change our search criteria for NKE from Facebook. NKE, enter. Filing type, restrict to 10K, because we're looking for annual data, annual report 10K, SEC filing. Click on documents for the most recent year, and then click on the 10K itself. Here's Nike's 10K, scroll down slowly. And then when you see selected financial data under Part 2, Item 6, click that. Now we're another strange presentation. We're looking for the earnings per share from continuing operations, right here. Earnings per share from continuing operations. Be careful because they show EPS from discontinued and EPS from continuing. So we're just going to look at continuing. So the most recent year data is $2.56. And the year before that they have $2.21. So last but not least, we'll go to Apple. Scroll back. Change this to AAPL, that's the ticker for Apple. And now change the filing type to 10K. All right, we've almost gathered all the data that we need from the SEC. Once we get here, click on Documents for the most recent 10K, and then click on the 10K itself to open it up. Scroll down slowly, slowly, slowly. All right, selected financial data right there. And now earnings per share right here. Most recent years on the left, good. So here are our two numbers. 2017 earnings per share is $9.27. And the 2016 data previous year is $8.35. Okay, so now we're done with what we need from the internet. So we'll go back to our table, and all I did while I was showing you that is I was filling in these two columns right here. Okay, so we now have the name, symbol, price per share, new EPS, old EPS. So now we're going to calculate the change in EPS. And for that, ladies and gentlemen, we don't need anything more complicated than a 4-function calculator. That'll do just fine. So what I need to do the change in EPS is I'm going to take the new EPS minus the old EPS over the old EPS times 100. So it's better to show in an example. Let's start with Ford. $1.91 new EPS minus old EPS of $1.16 equals 0.75, that's the absolute change in EPS, divided by 1.16 old EPS, gives us the percent change as a decimal, so just multiply by 100, and that gives us 64.6. We will round up to the nearest whole number and express it as a whole number. The change in EPS was 65%. Okay, now Facebook was 5.49 new year EPS minus old year EPS 3.56 equals the absolute change in earnings per share of $1.93 over the old year of 3.56, gives us as a decimal 0.542 times 100. The percent change in EPS is 54.2, round to the nearest whole number, and that will be 54% earnings growth. Now on to Nike. New year is $2.56 minus old year of $2.21 equals 35-cent change increase in earnings per share divided by old year 2.21 gives us 0.158 times 100 or a 15.8% change in EPS. We'll round up and say that Nike's earnings per share increased year over year by 16%. Now finally, Apple. Ladies and gentlemen, Apple, big company, $9.27 per share earnings minus last year's earnings or previous year's earnings of $8.35 gives us an absolute increase of 92 cents a share divided by old year's earnings of $8.35. Okay, gives us 0.11 times 100. We say Apple's earnings increased by 11%. Okay, now we're going to calculate the PE ratio. That gives us a whole number multiple of the price per share over the earnings per share. So what we're looking at for the PE ratio is this column here, price per share, over the new EPS. So this is our, from the other two videos, that's what we're calculating for the price per share over earnings per share. That gives us the PE ratio. For Ford, ladies and gentlemen, it is $10.81 divided by earnings of $1.91. And the PE ratio is 5.659. We round up to the nearest whole number. As long as we're consistent with this, it doesn't matter. So we'll say 6. That's the multiple of price to earnings. Now we'll do Facebook, 184.76 divided by New Year EPS of $5.49 gives us a PE ratio of 33.6. We'll call that 34. Then we'll do Nike, 66.82 divided by most recent earnings per share of $2.56 gives us a price to earnings multiple of 26. Now remember, the market average PE right now is 25 for the S&P 500, top 500 companies, Standard & Poor's Index. So just keep that in mind as you're looking at those PE ratios. Now Apple, finally Apple. $181.72 most recent share price divided by most recent earnings per share, $9.27, gives us a multiple of 19.6, and we'll round up to 20. All right, so now the price to earnings growth is just this number, 6 for Ford, divided by 65. Not 65%, just 65. Take the whole number. All right, so let's see how it works out. So for Ford, that's 6 divided by 65, and that gives us 0.092. 0.092. Now for Facebook, that's 34 divided by 54, and that's 0.629. And then for Nike, we'll take 26 divided by 16, and we get 1.625. 1.625. And then finally for Apple, we take 20 divided by 11, and we get 1.818. Now just like PE ratio, with a PEG ratio, lower is better. Lower is better for PEG and PE. So here's what I want to do. I want to play a game. If we were only looking at the PE ratio, which stock would be the best stock? Which stock would be the number one stock you would buy? I want to make a numbering system here. And we'll use a different color. I want to use green because green is money. So we'll use green. Okay, so if I was only looking at the PE ratio, who would win this game? If lower is better? Well, Ford would win the game. So Ford wins on the PE ratio. Okay? Who is the next most? So that's first it would be Ford, then Apple, then Nike, then Facebook in terms of the PE ratio. If we're only going on PE and PE, the lower the PE, the better the company, or the more undervalued the company, I should say. Now let's see if that changes with Ford. With Ford for the price to earnings growth. I'm looking for the lowest price to earnings growth, and the lowest price to earnings growth is Ford again. So Ford wins on both accounts. But let's see if there was any change. So the lowest couple of companies in the PE ratio were Ford and then Apple. And on the PEG ratio, we see that it changed, didn't it? So Ford still got the lowest PEG ratio, but the next lowest PEG ratio went to Facebook. And Apple was actually the highest. So I like to point this out, that Apple here fails on PEG, but they won on PE. So what does that mean? Well, it means we don't know enough about the company to make a choice. Nike was the most expensive on both counts, so they lose twice. Facebook lost this game once on PE, but they were the second lowest PEG ratio, so they lost on one count. And then Ford, they won on both counts. So if we had to pick one stock based on this information, and all we knew was the price to earnings growth and the PE, we would have to choose that Ford was the best stock to buy because it had the lowest PE and the lowest PEG ratio. That's how you do PEG ratio analysis, or price to earnings growth. And if you have any questions about this, or you want to learn how to adjust for splits or calculate the PE ratio and dive down the rabbit hole on that, go back and watch the first 2 videos. Otherwise, please like and subscribe and keep watching and learning. Try some of this for yourself. Find some other companies and calculate their PE ratios and PEG ratios. Remember, you need positive earnings and positive earnings growth in order to calculate this. So keep that in mind, and happy investing. Good luck. May the force be with you in making money. See you next time. Thank you.